this is every single month I hammer on this number. To me, this is one of the most important indicators in real estate. And so last month we saw everything at about 1 or below. This month, what is interesting is we're actually starting to see that number move upwards. And so this is an indicator of how much of a buyer or seller's market are we in. Earlier this year, we were in like an extreme seller's market, and now we're just in like more of a generic seller's market. So the odds are still in favor of the sellers, but I think it's just not as extreme as it was before. To see this pullback is really interesting, and this obviously shows a little bit of a slowdown in the market when we look at this being January and this being May.
What's going on, everyone? It's Rebecca Lynn Matheson, aka the Canadian Cottage Girl, and I have taken over Matt's channel today. We're going to do a little market update with Emma Pace here, who is the go-to realtor out of Toronto. So everything you need to know about the market, and if you're looking for a realtor, make sure you reach out to her. So welcome to the channel, Emma. I'm excited to chat with you a little bit about the Toronto market.
Appreciate you having me on. I was going to say, got a little bit of a better looking host than Matt this time. Eh?
We won't tell him that.
I was going to say, Matt, you look a little different this month, Matt.
Still a redhead, you know?
There you go. Excited to do this one with you. I mean, we did the Problems or Profits podcast together. Is this a risk for me to move from London to Toronto? Dude, I was like shitting my pants when I moved. I was like, how am I going to afford $900 a month in rent? Like, it's impossible. Like, Toronto's ridiculously expensive. It doesn't make sense. It doesn't make any financial sense. I can stay with my parents and save money and all this kind of stuff. But what is that getting me? Like, I'm not happy. This is really what I want to do. I have to take this leap of faith. I need to make this happen for myself.
Problems are what? Problems are profits!
Super pumped to do this month with you, Rebecca.
Absolutely. Yeah. Great to catch up with you again.
For sure.
Awesome. Well, let's get right into it.
Yeah,
you got some slides for us?
I do. I got my screen share up and ready to do this whenever you are.
Awesome. Let's get it.
All right, cool. So we'll hop right into the market activity here. So just a general kind of market update for just the overall market in Toronto. The good news is for real estate, it's been a relatively boring and slow month. So I'm always happy when I see those numbers. If you're looking for volatility in the market, check out AMC stock or Bitcoin right now. But if you're looking for a little bit of stability, the real estate market is, especially in Toronto, is kind of showing signs of that. So I've kind of highlighted here in red where we've seen a little bit of a pullback, and then in green where we're seeing a little bit of upward momentum, but overall across the board, it's been relatively flat month over month. So we've seen condo prices pull back a little bit, 1.6%. So last month, the average price point was at $727. It's about $716 for May. And then condo towns have pulled back a little bit. They were at $824 last month. They're at $801 this month. And then we've seen a little bit of upward movement for semis and detached. So semis are at 1.326 over last month, which was at 1.30, and then detached are about 1.7. So we are getting a little closer to that $2 million mark than we were. If we look kind of last year, we were at the 1.422. Obviously, the year-over-year numbers look large because we were in the middle of the pandemic at that point in time. But we're definitely nearing upwards of that $2 million mark now, and we're still seeing a little bit of upward pressure when it comes to detached pricing. So as far as I'm concerned, this is relatively flat for me. Like, this isn't a huge concern considering 2 or 3 months ago we were looking at like 5 to 7% month over month growth. This is a little bit of a pullback. I mean, I think it was to be expected at some point in time, but to me, when I look at these numbers, it looks relatively flat.
Yeah, absolutely. The year over year is crazy to see how much it's increased in that period of time, for sure. But it is good to see kind of that leveling and that things are becoming a little bit more stable here in the market.
Yeah, totally. So, I mean, I always show this number just as, sales volume. these look ridiculous because no one was transacting last year because nobody had any idea what was going on in the market. But I think what's really interesting is to look back here and see, since the beginning of the year, we obviously saw this massive uptick in activity at the beginning of the year, and then we've started to see things pull back. And what's interesting about this is normally we see spring market is the most active market for real estate from a seasonality perspective. And so this year it's reverted back a little bit, which is interesting. I don't know if it's just a result of lockdown restrictions easing and people being less focused on real estate, where here we were in lockdown, we really had nothing else to focus on. So I think that is actually probably the most interesting part of this graph. I mean, these look ridiculous and they're funny, but to see this pullback is really interesting, and this obviously shows a little bit of a slowdown in the market when we look at this being January and this being May.
Yeah, that is interesting. Like, especially given all of the factors that you had mentioned there, like people staying home in lockdown, they've, seen that same problem in their house every single time they walk by, many time after time. So it's interesting. Now people are getting more comfortable. They're, maybe going out to a cottage, having a nice weekend away, and things are starting to ease for sure. So that is a very crazy stat to see as well. And those numbers at the bottom are just outrageous. So
I mean, it's to be expected to see triple digits. I don't know how long that's going to last for. I mean, I think probably July or August, when we look at this graph, we'll probably start to see double digits again. But for the next couple of months, it'll look pretty wild. So, and then this is just another quick way to look at the year-over-year changes. So, I mean, we'll obviously see that these are freehold townhouses, also known as row houses, and detached have had the strongest performance, with semis coming in just behind, and then condo high-rise apartments and condo townhouses still with strong growth. I mean, considering the decline that we saw in condo prices last year, everybody is still up year over year. So we've still seen decent price growth, considering how much the condo market pulled back last year. Right. So this is, every single month I hammer on this number. To me, this is one of the most important indicators in real estate. And so, last month we saw everything at about 1 or below. This month, what is interesting is we're actually starting to see that number move upwards. And so this is an indicator of how much of a buyer or seller's market are we in. Now, if we're under 4 months, it's still a seller's market, but I think the overall sentiment of the market is, earlier this year, we were in like an extreme seller's market, and now we're just in like more of a generic seller's market. So the odds are still in favor of the sellers, but I think it's just not as extreme as it was before. Now, what's interesting to look at is the highest growth that we saw in these numbers were for condo apartments and condo towns. These have all, the freehold market has stayed relatively stable. But if we go back and we look at pricing, as more inventory piles up on the market, we start to see prices come down a little bit, right? And these have stayed relatively stable. So as I've been preaching month over month, looking at this number does give us a very good idea of what we can kind of expect for pricing. As we continue to see this number get a little bit higher, as it goes further to the right on this chart, buyers have more leverage. As it continues to get further left on this chart, sellers have more leverage. So when we start to see things move over to the right, we can expect that prices might pull back a little bit.
Got it. Yeah, that's really good to know. And this chart especially, I presume, would help you guide your clients. So whether or not somebody's selling a house or buying a house, just in terms of the strategy for how you're listing things, or the strategy and how you're approaching negotiations.
Yeah, absolutely. That's 100% what this is. If you're just someone who loves to watch the market and get a better understanding, a little bit of a lead indicator of what could potentially happen in the market, watching this number every month really is a good lead indicator as to what could potentially happen in the coming months. Previously, when Matt and I were looking at these numbers in the previous months, they were really, really low. Like if you're below 1 month of inventory, that is an extreme seller's market. That means there is, essentially, if nothing else hit the market, everything that exists on the market would be gone within 3/4 of a month for semis. Like that's not a whole heck of a lot of inventory. So as we continue to see this pile up, it's more favorable for buyers. But if you're a buyer, still understand that you don't have a ton of leverage. And if you're a seller, don't let this completely scare you or completely change your strategy, but you need to understand that you have to be prepared. If this continues to pile up, we might see a little bit of a further pullback in terms of pricing.
Got it.
Cool. And then, I know the London market is still quite hot, but if you spoke to anybody in real estate, I think over the month of May, we felt things slowing down. Like the market has cooled a little bit, but it was extremely, extremely hot at the beginning of the year. So I think what's really important, and shout out to David Fleming, if you ever watch this video, thank you. I read your blog every month, and I feel that you and I have a lot of similar mentalities around how we view the market. But he shared this, and I think this is a really important thing for people to look at, because all of these headlines were shared within hours of each other. During May, okay? And so looking at the numbers really is the most important thing to get a better understanding of what's happening. Because if we look here, you see this, like Globe and Mail, Toronto housing market cools, people are exhausted and they want to take a break. Hardly anybody's buying condos in downtown Toronto. What does that even mean, hardly anybody? And then, but then also BlogTO, within, the same day says that prices hit an all-time high. So of course people are confused as to what's going on in the market. You always just read the headlines, because it's important to understand that all of these headlines were shared on the exact same day, right? So look at the data. Don't necessarily always be skewed by just what's happening in the headlines. They're putting things out there as clickbait to get you to read the articles, of course, but headlines don't tell the whole story. They're typically running with one particular data point, and we need to look at the entire market to get a better understanding of what's actually happening.
Yeah, thanks for sharing this. This is really interesting and really highlights that it is so important to follow up with a source that you actually trust when it comes to these stats. And that's why I think these month-over-month data updates are so important for each of the markets. Like if you were just looking at an article that was posted in January as a seller, you would expect very different things from if you're listing your house in May. So I think it is really important to understand like what's happening, up-to-date information, and actually do the due diligence on the numbers. Because from all three of these titles, I'm getting a very different message about what's going on. That's so fascinating.
Yeah, so this is what I'm saying. The media, the media is fantastic. They do provide data, but if you're active in the market and you want to get a better understanding of what's going on, look at the actual data and statistics and work with someone that you trust and base your decision off statistics, not headlines.
Yeah, love that.
So, and then, to that point, just to kind of put this in perspective, they're saying like the housing market is cooled, hardly anybody's buying condos. And I will be honest, I did feel a little bit of a slowdown overall. I felt that the market had cooled a little bit in May, and it had, but we still hit one of the top 10 all-time sales records numbers for TREB in all of history. So how slow can it really be, right? So it's slower than what we've seen, but it's still, we're seeing a tremendous amount of volume still happen. It's just a little bit slower than what we had seen at the beginning of the year. So we are seeing activity, but the most important number is this. So this is how we were talking about seasonality earlier, April versus May. If we look at the April versus May numbers for the last 19 years, May historically outperforms April because we usually see, again, that ramp up in the spring market. Only 4 times in the last 19 years have we seen May be slightly slower than April, and this happened to be one. right? And so that is super interesting as we head into what is historically the busiest real estate season. To see that little bit of a pullback is interesting. So normally we see, April, May, June, super, super hot months. July and August are usually a little bit slower just as a result of people being on vacation and whatever. And then Labor Day hits and fall market comes back into full effect, and then snowfall hits and things slow down again. So just a little bit of an interesting year as a result of lockdown restrictions in the pandemic and stuff. But I think this proves that the sky is not falling, and this also proves that the market is cooling a little bit.
Yeah, and I think that point that you made about the relativity is really important here, because yes, it's cooled a little bit from April, right? We were at 13,000 and now we're at 11,000 in that second chart that you have there. But still look at the numbers from previous years. Like last year in 2020, it was at 4,000. The year before it was at 9,000, almost 10. So it's all relative, right? It's cooled a little bit from the crazy market that we had at the beginning of this year, but it's still comparatively very high.
Yeah, I mean, absolutely. Look, we're over the last 19 years, the highest number of sales that have ever happened in May, 19 years. So yes, we are seeing a little bit of a pullback here, which is unusual. If we look at the chart, it is a little bit unusual, but the sky is not falling. Transactions are still happening. People are still buying and selling real estate. They just happen to be buying and selling real estate a little bit less than what they were last month.
Yeah.
Right. And so condo market update for everybody. Seeing the numbers at the beginning here of this, slight pullback. I'm sure some people who are watching this video are not overly pumped about that, but that's okay because I want to also put this into perspective. So when we look at these two different charts, we're adding an extra 2 years. So 2018 to now, and then 2020 to now. We saw I feel it was a massive pullback in condo prices over 2020, right? So here was, the first initial lockdown, and then we saw market bounce back, and then October to December was the, bottom of the condo market for the last little while. Right. And so the good news is, as discussed earlier, that all of these losses that we had seen over 2020 have been reverted. So, we saw this massive uptick in pricing, and now we're seeing a slight pullback. But if we look at this overall chart, which gives us more data points and has more traditional activity without a pandemic in it, if we look, this is why real estate is not something that's typically a short-term thing. If you're willing to commit and you're willing to invest and you're willing to hold on for a little while, the market is typically favorable. And so if we look, if anybody bought at the beginning of 2018, which is really not that long ago, even with all of the ups and downs that have happened in the market, you're still coming out quite a bit ahead. So I think it's really important for people to put this into perspective. We're human beings. We want instant gratification. We want to buy something, and the next month we want to look at the data and say that we made money. And real estate, real estate is relatively forgiving as long as you're willing to be committed to this over a longer period of time. So this looks like an extremely volatile market if we looked at it in comparison to stocks and all of that kind of stuff. This looks a little bit more like AMC right now, and this looks a little bit more like the S&P 500. So just stay a little bit more committed for the long term. And I think it's just important to kind of look at both, because it's really easy to I think for condos to get a bad rap just given what's kind of happened in the last year. But, as long as you're committed to making this a longer term plan for yourself, you should be okay.
Yeah, that's right. Yeah, and you can see the stability there, right? Even with a big downturn there in April when we had the first lockdown, it recovered, and that's the greatest thing about real estate, is that it's more about the time in the market, and definitely you can win by doing this. It is stable. It does fluctuate, obviously. Any sort of investment would, but over time it does appreciate, which is great to see.
Yeah, for sure. And then what I wanted to do was to break these numbers down by segment of the condo market. because I know a lot of people that are going to be watching this are interested in condos. So we typically see 3 fairly dense locations for condo inventory in Toronto. So we're going to see downtown, which I've added downtown in Mimico here, North York, and then Scarborough Town Center. These are kind of like the 3 most condo dense areas if you're looking for inventory. And so I went and I split downtown and Mimico into kind of 3 segments. So the west end of downtown, the east end of downtown, and then Mimico. And then I have North York as a whole and Scarborough Town Center. And so what I did was I pulled all of the data over, May, and then a month ago, 3 months ago, 6 months, 12, 3 years, and 5 years to show kind of like historical trends. The most interesting thing to me is that Scarborough Town Center, which I think arguably for anybody that's looking at this chart would say is maybe the least desirable location of all of these, has actually outperformed over the last 5 years every other condo dense area in Toronto. Now, my personal thoughts when looking at this chart is probably just as a result of it being the lowest price point for entry. So we're starting to see more volume kind of pump into those locations. It's right on the subway line. It's performed really, really well historically, the best out of all 5 of these segments here. But the more important thing is, I think everybody who's bought a condo in Toronto over the last 5 years has done pretty darn well with their investment. And so again, to your point, time in the market is the most important thing. Timing the market is, you can try, but time in the market is absolutely more important than timing the market. But this will give a good overall reference point to sales price and average price in each of these locations for people who are looking to enter the market or potentially invest. With the East End and Scarborough being, with Mimico and Scarborough being the most affordable from an entry level perspective. And then arguably, downtown, if you're buying a condo, again, arguably, in my opinion, probably one of the, most AAA kind of locations.
Yeah. Yep.
All right. And then just so everybody has a kind of visual as to what that looks like in Toronto, this is the Toronto Real Estate Board, so the TREB map. And so what we saw in May, we saw just shy of 1,900 total sales that had occurred. 389 sales were on the west end. So anything here where you see W, the average sales price was $653 here in May. In the green, where you see all of these C's, that's going to be central Toronto. And so we see the bulk of trades happen because this is where the bulk of the inventory is housed. Like realistically, it's down here in CO1 and CO8. Okay. And then the east end is in red out here, which we saw 257 sales with the most affordable or entry level kind of price points that we can get into. So just to kind of give a visual for all the viewers, you're going to see the majority of trades happen here. You're still going to see stuff on either of these sides, but these are going to be more affordable. But just to kind of give you a visual as to total volume and average sales price.
Yeah, I love this like kind of contextual piece here. And that definitely lays out exactly like the locations where people should expect to see that. And the numbers, the numbers show exactly what you're talking about here with 1235 sales in that central circle there, and then west and east all around that kind of average 300 sales kind of point. So that's definitely puts it into perspective in terms of where everything is happening in Toronto.
Yeah, for sure. Look, this, like I said, this probably makes up the bulk of it because this is right downtown. Yeah. But again, you're going to see some stuff over in Scarborough Town Center. You're going to see a lot of stuff down here in Mimico. But yeah, just a visual so that people know where they're going to be finding condos if they're looking for it. And then a quick update for my luxury condo viewers. So shout out to everybody that sent me messages about it. I appreciate that. It's interesting. There isn't a whole heck of a lot of activity that happens in the luxury condo market. So for the data that I pulled, it's anything that's sold above 1.5 million in the condo market. And so what's interesting is even though the overall condo market looks like it has pulled back, the condo market actually has performed better. The luxury condo market has actually performed better than just the overall market from a month-over-month perspective. So we've seen inventory pull back by 12%. So last month we had 34 sales, this month 30, and then days on market has actually reduced by 12% as well, which is quite a bit. Like we were saying, on average 27 days, that's come down to 24 days. So they're moving a little bit quicker. But asking and sale prices are both up. And what's important to understand is, of the 30 sales that we see here, 7 of them are above 2 million. The remainder are between 1.5 and 2. So we don't see a whole heck of a lot of stuff from an inventory perspective above that $2 million price point. The bulk of this luxury market is going to be between 1.5 and 2 million for sales. But it's super interesting to see that even though the overall condo market looks like it's pulled back, these higher end, more luxury ones are actually moving forward.
That's really interesting. Like, is there anything specifically happening in Toronto or in the market that you think can be attributed to that?
I don't know if it's just a matter of low inventory. Like, of course, we've seen a pullback in overall sales. And so, you know, when we look at 1,800 sales versus 30, we just have less selection. So that could just be a result of it. Obviously, inventory tightening up, like we talked about before, months of inventory being that indicator. As we typically see that inventory tighten up, prices, supply and demand. That's essentially what it comes down to. And so I imagine that that's, you know, that's probably what we're kind of seeing here. And I think seller motivation when it comes to luxury condos tends to not be there as much as what you might find with someone who has a $500,000 condo and maybe they need to get rid of it because they've got to pay off some debts, or there might be just more motivation and you know, we'll say volatility in that segment of the market. Whereas, you know, typically people that are holding $2 million, $3 million condos, they want to get the price that they want. They're not necessarily in a massive rush to get the thing sold. You know, they take some time for due diligence from a financing perspective and that kind of thing. So, you know, without having those hard facts, that's probably my professional opinion on what's happening.
Yep, love that.
And then, yeah, just a couple last things. So rental market changes. Matt and I talked about this last month, but we're starting to see things pick up a little bit in the rental market as well, which is good news for investors because we've seen it pretty beat up over the last year. And so we're starting to see, just to kind of keep the sample size fair, I did any 1-bedroom plus den units that sold on the waterfront that had a balcony and parking that were over 500 square feet, right? And so if we look at that data from April to May, we're starting to see the average sale price, you know, is at $2,131 versus just shy of $2,100 last month. So we're starting to see that rental price increase a little bit, so almost 2% over the last month. But the most interesting statistic is the days on market is down by 22%, which is a lot. So it used to be we'd have to budget quite a bit of time for that vacancy, right? We need to budget and allocate costs and expenditures towards vacancy, where we're starting to see, I mean, month over month, it's dropped by over 20%, which is pretty good. So we're starting to see these spaces get filled a little bit quicker than we were previously.
Yeah, that's great news for investors. I'm sure they're all going to love that slide.
Yeah, absolutely. But that's all I've got for you guys today. I hope that gives you guys a pretty good idea of what's happening, you know, general market, condo market, rentals, and luxury.
Awesome. Well, Emma, thank you so much for coming onto the channel and joining me today. And you had up on that last slide there just places where people can reach out to you. So do you have a preferred method of chatting with people? Like, do you love Instagram, or does it matter to you?
Instagram is the easiest way to get a hold of me. I will typically see the messages there a little bit easier than I will in my email. So yeah, anybody wants to get a hold of me, Instagram is probably the best place.
Awesome. Well, thank you so much for the monthly market update here on the channel. And we look forward to hearing even more from you next month. But thanks for letting me crash the interview today. It was always a pleasure chatting.
For sure. Always good to see you, Rebecca.
Good to see you too. Take care.